There's a number that every single XRP holder needs to understand right now. Not because it is a guarantee, not because someone on the internet told you to believe in it, but because the technical data, the on-chain metrics, the institutional flow numbers, and 12 years of historical patterns are all quietly converging on it at the same time. And that kind of convergence does not happen by accident. That number is $2. And before you dismiss it as wishful thinking from a community that has been disappointed before, I want to walk you through exactly what the charts are showing, what the whales are doing, what the institutions are doing, and what the AI models that major financial platforms are running are actually projecting. Because when you see all of it together, the $2 conversation stops being speculation and starts being something much more serious. Stay with me, because this is the most important analysis of the current XRP situation that you're going to hear this week. Let us start with the chart pattern that every serious technical analyst who has looked at XRP in the last 72 hours is talking about. XRP has spent the entire month of February defending the same demand zone twice. It tested the $1.34 to $1.35 range, bounced, pulled back, and tested that exact same floor a second time. The price held both times, and when a market tests the same support level twice and holds on both occasions, technical analysts have a specific name for that formation. It is called a double bottom, and it is one of the most historically reliable bullish reversal signals in the entire language of technical analysis. Here's how a double bottom works and why it matters so much right now. When price hits a support level and bounces, it means buyers showed up at that level and pushed the price higher. When price comes back down and tests that same level a second time and holds again, it means those buyers are still there. They did not panic. They did not disappear. They bought again. And the second successful defense of that level signals something critical to every market participant who is watching. The sellers who have been controlling this market are running out of ammunition. The buying pressure at that level is real, persistent, and strong enough to absorb the selling twice. The specific numbers matter here. The double bottom on XRP's 12-hour chart formed at $1.34.36. The neckline of the pattern, the resistance level that, when broken to the upside, officially confirms the reversal, sits at $1.66.17. That is the trigger level. That is the price that, when XRP closes above it with volume confirmation, turns the double bottom from a forming pattern into a confirmed one. And a confirmed double bottom with a neckline at $1.66 mathematically projects to a target of approximately $2. That is how the technical measurement works. The height of the pattern from the bottom to the neckline, added to the neckline itself, gives you the price target. This is not an opinion or a hope. It is the standard technical measurement that every trained chart analyst applies to double bottom formations. But here is where the story gets genuinely interesting. Because the chart pattern is not working alone, it is being confirmed by multiple independent signals that are all pointing in the same direction at the same time. The percentage price oscillator, one of the momentum indicators that professional traders use to measure the strength and direction of price movement, has formed a bullish crossover on XRP's chart. This is a specific technical condition where a faster moving momentum line crosses above a slower one, signaling that buying momentum is beginning to outpace selling momentum. The last time this exact combination appeared on XRP's chart alongside a double bottom, the subsequent price move was significant. Pattern recognition is not infallible, but when the same technical setup that preceded a major move in the past reappears with the same confirming indicators, it demands serious attention. The on-balance volume indicator, which tracks whether volume is flowing into or out of an asset, is also beginning to stabilize after a prolonged downtrend. Volume is the fuel that price moves run on. A double bottom without volume support is a weak pattern. But when volume begins to show early signs of accumulation, when buyers are not just showing up at the support level but doing so with increasing commitment, the pattern gains structural credibility that pure price action alone cannot provide. Now let us talk about what the whales are doing, because this is the data that most retail investors never look at and where the real intelligence about market direction lives. Data from Glassnode shows that large wallets, specifically addresses holding at least 1,000 XRP, have started rebuilding their positions. Supply held by these addresses turned higher again in recent weeks after a prolonged period of distribution. Let me translate what that means in plain language. The biggest holders in the XRP market, the entities with the most information, the most resources, and the most sophisticated analysis capabilities, stopped selling and started buying again. They paused their distribution and shifted to accumulation during a period of price weakness. This is not small. This is the most reliable institutional signal in crypto market analysis. Retail investors tend to buy at the top and panic sell at the bottom. Whales tend to do the opposite. They distribute into strength and accumulate into weakness. When whale behavior shifts from distribution to accumulation at a technical double bottom, with bullish momentum divergence. You are looking at a setup that the smartest money in the market is actively positioning for. A similar easing in whale flows appeared in April 2025. What happened after that? XRP rebounded by more than 50%. History does not guarantee anything, but when the same pattern of behavior that preceded a 50% rally reappears at another technical inflection point, the responsible analytical conclusion is to take the signal seriously. Now let us layer in the institutional flow data, because this is the third pillar of the $2 case, and it is the one that most people are underestimating most significantly. Spot XRP ETFs have now accumulated over $1.24 billion in total assets since their launch in November 2025. But here's the number that deserves your full attention. These funds have never had a single monthly outflow since the day they launched, not one. In January, they recorded $15.5 million in inflows. In February, during the same month that XRP fell to its lowest level since the start of the bull cycle, during the same month that Bitcoin and Ethereum ETFs experienced significant outflows, XRP ETFs recorded $58 million in inflows. The institutional money did not run from the dip. It ran toward it. That is a fundamentally different behavior than what you see from retail investors who sell in fear. Institutions saw the price decline as a buying opportunity, not a warning signal. And just this week, additional inflows of over $3 million in a single day brought cumulative ETF inflows above $1.24 billion. The number keeps growing through every red candle, through every bearish headline, through every piece of macro uncertainty. The institutional money keeps flowing in. This matters for the $2 target because institutional inflows create structural demand that does not disappear overnight. Every dollar that flows into an XRP ETF represents a manager somewhere who made the decision to allocate to this asset class based on fundamental analysis of its long-term value. They're not going to reverse that decision because of a few weeks of price weakness. They are going to hold, and the ETF managers are required to hold the underlying XRP to back those fund shares. That is permanent buying pressure sitting beneath the current price level, providing a floor that did not exist in previous market cycles. Now let us talk about what the AI models are projecting. Because for the first time, the major financial AI platforms are providing public price predictions for XRP that give us a useful reference framework. ChatGPT's baseline scenario places XRP in the low $2 range as its central case for 2026, with the possibility of reaching the mid $4 range if macro conditions cooperate. Grok, developed by Elon Musk's XAI, has a base case of $2.50 to $2.80 if adoption remains modest. Perplexity Project's XRP could reach as high as $9 by late 2026 if momentum remains strong. And Standard Chartered, one of the most respected institutional banks in the world, has a current 2026 price target of $2.80 after revising it downward from $8 due to market conditions. But critically, they have maintained their long-term $28 target for 2030. When institutions revise a target down but maintain their long-term conviction, they are telling you that they believe in the fundamental story, but are being realistic about near-term timing. The convergence of these AI projections around the $2 range, with ChatGPT centering on it as a base case, Grok using it as the bottom of its base range, and Standard Chartered using it as their near-term recovery target, creates an analytical consensus that is not based on hype or community sentiment. It is based on fundamental analysis of XRP's technology, adoption trajectory, regulatory progress, and market dynamics. There's also a fundamental dimension to this story that the chart patterns and price models alone do not capture. The XRP ledger's real-world asset tokenization ecosystem now holds over $2 billion in assets across 200 projects, larger than both Solana's and Polygon's RWA ecosystems. The stablecoin supply on XRPL rose 1.4% in 30 days to $340 million, and 30-day transfer volume rose 17% to $1.2 billion. These numbers grew during a crypto market crash. That is what fundamental strength looks like. Growth that persists through market adversity because it is driven by real utility and real adoption rather than speculative momentum. The XRPL is also about to receive 3 major protocol upgrades in the first quarter of 2026. A permissioned DEX, a native lending protocol, and confidential transfers for institutional privacy. Each of these upgrades expands the use case for XRP and the XRP ledger in ways that create real organic demand for the token. When protocols get significant upgrades that increase their utility for institutional users, the assets associated with those protocols tend to respond. Not immediately, not dramatically, but with sustained upward pressure that builds over weeks and months. Now let me give you the complete, honest picture, because responsible analysis demands it and you deserve it. The path to $2 is not guaranteed. The descending channel that has defined XRP's price action since January is still technically intact. For the double bottom to fully confirm, XRP needs to clear the neckline at $1.66 with volume. Until that happens, the pattern is forming but not confirmed. A failure to break the neckline, or a break below the double bottom support at $1.34, would invalidate the bullish setup and likely push price toward the $1 to $1.11 range. The macro environment remains the biggest wildcard. Bitcoin is sitting on pace for what could be its fifth consecutive monthly loss, its worst losing streak since 2018. When Bitcoin is under pressure, capital does not generally flow aggressively into altcoins. XRP has shown relative strength during this period, which is an encouraging sign, but relative strength does not fully insulate any asset from a broad market deleveraging event. Geopolitical tensions remain elevated. The escalating situation involving the United States and Israel creates genuine risk-off pressure that can drain liquidity from high beta assets, regardless of how strong their technical setups look on a chart. Macro conditions do not care about double bottoms or whale accumulation data. And there is the ongoing structural question about RLUSD, Ripple's own stablecoin, and whether its growing adoption by financial institutions represents a competitive threat to XRP's bridge currency use case. The RLUSD market cap has crossed $1.56 billion. If banks continue choosing RLUSD over XRP for settlement purposes, it reduces the fundamental demand case for XRP price appreciation, even as Ripple, the company, continues to succeed commercially. These are real risks. They deserve honest acknowledgement. But here is the critical distinction that separates the current setup from previous periods of XRP weakness. In past cycles, when XRP declined this significantly, there was no institutional ETF product providing a structural buying floor. There was no $1.24 billion in institutional holdings that needed to be maintained. There was no double bottom forming with whale accumulation data confirming at the same time. There was no AI consensus from major financial platforms pointing toward recovery. And there was no XRPL ecosystem generating $2 billion in real-world asset tokenization during a market downturn. The structure of this market is different from what it was before. And when market structure changes, the historical patterns of how price behaves during weakness can change with it. The $2 level is not just a technical chart target. It is a psychological threshold that represents approximately a 50% recovery from current levels. It is where analysts have converged from multiple independent methodologies. It is where the double bottom pattern points. It is where ChatGPT centers its base case. It is where Standard Chartered has its revised near-term target. It is where the neckline measurement lands. For a market that has just formed a double bottom with institutional whale accumulation, bullish momentum divergence, persistent ETF inflows, and historically strong March seasonality all confirming at the same time, that 50% move toward $2 is not a fantasy. It is the natural technical resolution of the pattern that is forming right now. Watch the $1.66 level, watch the volume on any break above it, watch the weekly ETF flow numbers, watch the whale accumulation data from Glassnode. These are the signals that will tell you whether the double bottom is resolving, as the technical pattern suggests it should, or whether external conditions are overwhelming the pattern's natural completion. The chart is speaking, the institutions are speaking, the whales are speaking, the AI models are speaking. They are all saying different parts of the same sentence. And that sentence ends at $2. If this breakdown gave you a clearer picture of what the real data is showing for XRP right now, hit the like button so more holders can access this kind of analysis rather than relying on hype or fear. Subscribe to stay updated as the neckline test and the March seasonality story develop in real time. And drop a comment. Do you think the double bottom holds and XRP breaks toward $2? Or do you think macro conditions will override the technical setup? The most valuable insights in this space always come from the community that is watching closely. Stay technical, stay data-driven, and never let the noise drown out the signal.